Welcome to All Things Financial, Financial Services and Economic Topics are discussed from a simplified perspective. Stay tuned.
What's that, man? I go to school, daddy. I get one of this, daddy. Come when I get one of them, I'm on your back then, youth. Body can't talk to your school, man. I have lunch money, nothing, brother. Braffins this whole week. Watch ya? No? Scam boy, nothing.
I can't spend.
This can't spend, I know. Boy, look from where I come from to a rate.
So I know enough Jamaica number 3540 can relate to the previous clip. Back when less money could then buy more goods and services in the economy in comparison to now, where more money can barely buy the same amount of things. That is the long-term effect of monetary inflation. Mainstream media, especially with their narrative, will try to convince you that inflation at 2% or 2.5% is good for the economy. We're going to discuss this, and at the end of the video, you can come to your own conclusion. Mainstream media describes inflation of 2% or 2.5% as good for the economy and being described as desirable for growth. This could be further from the truth. Mainstream media's definition of inflation is price increases caused by an increase in production costs or workers' union asking for higher wages. While these are side effects of inflation, they are the root cause for inflation. Let me say it one more time. While these are side effects of inflation, they are the root cause for inflation. So what causes inflation? There's primarily only one thing that causes monetary inflation. I'll get in that. The definition of monetary inflation is an abnormal increase in the volume of the money supply. This has a devaluating effect on currency and its purchasing power in relation to the price of goods and services. Meaning, the more money that is printed but with no productivity causes your currency to be worth less in relation to the price of what you want. So you seeing prices going up really means the value of a dollar is going down. That happened before price go up. Give an example. Let's say a 5 book. Each book is $10. The current money supply of the economy is $50. If the central bank were to increase the money supply to $100, what would happen to the price of each book? It would go up in value. So instead of being worth $10, the book will be now selling at $20 to offset the increase in money supply. This is our simple economics. Really and truly. But what should be understood and not understated is the fact that the quality of the book did not go up. Quality of pages did not go up. They did not become more. Most likely they become less pages in the book. Really and truthfully, you notice that with certain consumer goods. This is taxation without legislation. Continuing. Now, serious question. What do you do all day, every day? And says you work. Why do you work? So you can earn an income. What does getting paid signify? That in essence signify that you traded 40 hours a week, 80 a fortnight for money. Now if you trade that time, which is your life, for money which is being devalued intentionally to enrich a few and benefit only a certain small majority in society, is that not theft? But let us continue. Now this money you're getting paid is worth less and less every year through inflation, meaning you're working harder and harder for money with less purchasing power. Now, if this doesn't make you feel like you've been taken advantage of, I don't know what will. You're trading your time, in essence, your life, for a pretty piece of paper that somebody's manipulating down in value for their self-interest and benefit. And it is a well-proven and researched fact. You can research monetary history. Every single fiat currency ever invented in history has always ended in the currency being devalued until it's worth next to none. Money, as a definition defined by those who created free markets and enterprise, is a store of sound value which you can use to exchange for another person's goods or service. The part where it says sound money, where you can store value, when they say that, they're actually talking about gold and silver. No other currency is money. Money is gold and silver. Currency is the paper money that you have.